Hello everyone, welcome to this follow-up video of the MACD. So I'm going to bring the price chart back. So this is the chart we have of Mr. Price. Now remember we looked at the moving average line. So here we can see that there is a 200-day moving average which is above the price, so it's acting as a resistance. Every time price goes there and it sort of moves downwards again. But we are talking currently about the MACD and how it interacts. So remember we said that the strategy of the MACD is to buy on the crossover. So if I place my mouse on the cursor here on the 3rd of June, this is when the crossover happened. And as you can see, the closing price was 204 Rand. And by that time, you can see the price has began an uptrend. If we draw a line here of this downtrend, we can see that price broke the trend here and started moving upwards. We only get to capture the cross on that day, and the lowest price for that day was 197. Here the lowest price was 197, which is not bad, but if you had captured this movement at the bottom here, you would have been able to gain much. But here, if you can see, on the day that you bought, let's say you bought at the low of 197, the next day price went down as low as 193. The following day it went down further and it went further down as well before proceeding up. So in this case it went down and reached this point, then you had a bearish engulfing, then price started coming down. So you can see here that if you came in at this point at the cross, even though the MACD started moving and becoming more bullish, price didn't really go further from your entry point here before it started moving downwards. Again, if you were looking to short at this point here, you would have maybe entered on the next day after the confirmation of the cross, which is here. So you would have entered at this point, but the price would have reached a peak at that point. So you'd have wanted maybe to short it on this day. Then you capture the movement to that point. So as you can see, the MACD is acting as a lagging indicator in this case. But you want to have foresight in the market, what things are about to happen so that you can capture most of the meat of the move. But in this case, as you can see, you would be missing them if you are looking at all the crosses. As a tweak, some people might want to capture the bottom. When they see it about to turn, then they say it might be a good time to enter. For example, here you say, okay, it's turning and I should be moving. I should be moving into a position going long. Then your position moves upwards. It hasn't crossed, then it tries to cross, but then it doesn't, and it starts coming down. Tries to cross again and move upwards again. So as you can see, there are also dangers in trying to capture the bottom because you're not sure whether it will continue and it will cross or to try to cross and fail and continue on a bearish trend. For example, here at this point, you can say, let me capture the bottom. Then it starts moving nicely at this point. Then you say, you're feeling nice, like, oh, I've captured it. Then it comes to this point. It hasn't gone up much from when you entered. You're still within a tight range. Then it comes down and gaps down here. And further movements don't go back to the point where you entered the long position. So you've actually spent, this is the 13th, and if you came out maybe at this point, you have lost maybe half a month where price was not doing anything much. So those are the perils as well of trying to capture the bottom or the top. Sometimes you can capture a top like this point and say, let me go short. Then price refuses to come down and cross, much to your frustration. So those are the challenges of using the MACD as an indicator. So that's it for now. In the next lesson, we'll continue to explore the MACD further. Thank you.